Hello and welcome back to Beyond the Deals podcast. I am your host, Gabrielle Simmons. I am here today with Michael Hoffman with Cost Segregation LLC.
Cost Seg Property.
Cost Seg Property.
Yeah, it was too long to put all that in there. So
Right.
just abbreviate it.
Cost Seg Properties. Yes.
Yes.
Thank you for being here with me today.
It's a pleasure. I'm glad we could finally put this together.
Yes.
It's great to be part of your organization.
And you guys have been around for a bit and
Been on
showing up at the events and sponsoring.
Yes.
Great to have you as an official affiliate
Thank you.
of Real Estate Deal Makers. Yes.
Thank you. Appreciate it.
Real fast before I forget, I do want to shout out our sponsor, Builders Outlet. Builders Outlet is your go-to for windows, cabinets, doors, and trim. They're located here in Denver, Colorado. And if you are a verified member of Real Estate Deal Makers, you definitely want to be going there and getting your discounted materials for your properties, your flips, your rentals, whatever you got. Go to Builders Outlet. Check them out at buildersoutletco.com. Okay, now that that's out of the way.
Got the advertising.
Yes. Got to give a shout out to our sponsor for sure. But thank you for being here again.
Of course.
I'm excited to have you because just in the time that I've known you and gotten an opportunity to learn from you, many things, even outside of cost segregation, as we were just having a meeting about commercial properties. But I've learned so much about what cost segregation is, and you've debunked a lot of the common myths about cost segregation,
Right.
who can use it and what it can be applied to. So without further ado, tell us about you and your company and what you do.
Sure. Just a brief history. I was in primarily residential development, multifamily, single family, for 40 years of my career. Worked for some very large companies on the West Coast, and then started my own companies, and primarily in Colorado, and did possibly, gosh, I had to add between lots and single family and multifamily, maybe 1,500 to 2,000 different properties.
Wow.
So it was a great time, great career.
Yeah.
I'm very privileged to have had it.
And you're well versed in that space. I've gathered just in our conversations, you have a plethora of knowledge, and when it comes to land development, multifamily, all that space that I'm super new to, I know that you're well versed.
Well, I've been fortunate to have been exposed to it early in my career, and I guess sharp enough to learn it. So, but yeah, it's very privileged to have had the career that I've had, and now we're off to different, much different type of thing, but still real estate related.
Yeah.
And that's cost segregation.
Right. And what is cost segregation? If you could explain
Sure.
that.
Yeah, and in layman's term, and we're all familiar with depreciation, right? You buy something and 2 years later it's not worth what it was, right? So that term is pretty familiar with, or pretty obvious to most people. But cost segregation, what it is, it's a way to accelerate depreciation on real property. Real property is, it could be a single family home, it could be a multifamily home, a large apartment complex, it could be the building we're in. That's real property. So what we do is much different than what most people do with respect to depreciation on real property. The IRS allows two different ways to address depreciation on real property. One is straight line.
Right.
Okay, and they differentiate between residential properties and commercial and industrial properties. And so for today, I think just keep it simple. We'll talk about residential.
Yeah, which is great because this is what most people don't know you can actually do cost segregation on. Is residential and single family even.
Exactly.
So I love that, yes.
Okay, straight line depreciation is for residentials 27 and a half years. Okay, and this all came about, believe it or not, the IRS back in the 60s came up with depreciation on property. And they did it so that they could encourage investment into properties. People just weren't buying commercial properties. They weren't buying apartment buildings. They weren't doing any of this type of stuff. And they wanted the economy to grow. So the IRS started allowing this. And it went very well for quite a number of years. But about 30 years ago, someone approached the IRS, actually with a lawsuit, and they said, and it's a terrible line, but we appreciate the fact that we can depreciate property, but there's a problem. And again, residentially, we own these residential properties that we lease out, and you're saying 27 and a half years, but things don't last 27 and a half years, right?
Right.
The carpet in my rental's not going to last 27 and a half years. Even luxury vinyl doesn't last 27 and a half years, but certainly not carpet.
Right.
And my appliances aren't going to last. The curtains aren't going to last. The concrete walking up to the place is going to last. The roof is going to last.
Right.
So we need to do something about this. So long story short, about 30 years ago, they came out with what's called accelerated depreciation. And effectively what they've done is they've taken some of those elements within your house that don't have the life expectancy of 27 and a half years and allowed you to accelerate the depreciation on them.
Right.
So as an example, you have a house, and again, I'm going to throw some terms out there that most people wouldn't be familiar with, but some will. Cost basis.
Okay.
And that sounds, what's cost basis? Well, cost basis is effectively what you purchase the property for, plus any additions, remodeling, replacements, those types of things.
What's your bottom line?
What's your bottom line? What's your all in?
Yeah.
For cost segregation, we do take that cost basis, but then we strip away the value of the land because the IRS says land doesn't depreciate. I know differently, by the way. It does, and we had that discussion earlier.
Yeah.
So anyway, so we get this cost basis, and so let's say cost basis is $500,000.
Okay.
All right. You divide that by 27 and a half years, you're what, around $18,000, $20,000. I'm trying to do the math in my head and I can't. Regardless. So do that. And, that's not a bad thing to be able to put in your taxes, right?
It's potentially $20,000 write-off.
It could be.
Depreciation.
Depending on what your status is. But yes, right? I mean, there's clearly an advantage to that. With accelerated depreciation, that same property, through our process, is closer to $130,000 to $150,000. I don't know about yourselves, but I'd much rather have that on my taxes than 20 grand.
Right.
Right. So that's the difference between accelerated and straight line.
Right.
Yeah.
And what is so amazing about that, and as I briefly mentioned, is most people don't know that you can do a cost segregation study in order to accelerate that depreciation on our single family homes.
Yes. And part of that is because when this all came about, nearly 30 years ago, they were looking at much larger properties. And we can still do those types of properties. They're looking at ballparks and major shopping complexes and massive apartment buildings or commercial buildings, those types of things.
Right.
And everyone was kind of focusing on that. And the price for single family was pretty high. It wasn't to where the point where you're trading dollars with the person doing the study, but it wasn't a great return. So even talking to a couple of CPAs that I know, as few as 5 years ago, a single family home, a study would cost $12,000 to $15,000, and that's
wow.
That's a bitter pill to swallow,
right?
Because, well, obviously all industries have been affected by computers and programs and the amount of analysis you can do in very short periods of time. The cost has dropped.
Right.
Also, things like Google Earth have come along and they have measurement tools. So we can get a whole lot of information from Google Earth. My construction analyst can take a single family home and look at all four sides of that just from Google Earth.
Nice.
They literally count windows and doors from Google Earth.
Wow.
And measure the roof and measure concrete and those types of things. So it's really cut the costs down and made our approach, the types of studies we do, much more affordable to even the single family homes.
Right.
Yes.
And so to clarify, your company, so I own property.
Mm-hmm.
I come to you to hire your company to do a cost segregation study, which is going to do that full analysis. You're going to determine how much of the value of my property counts as the cost basis, right? And how much of that we can accelerate the depreciation for.
Correct.
And then your company, you have a CPA that you work with that
we have she's actually a registered, she's a enrolled agent with the IRS,
right,
which is kind of like a CPA on steroids.
Yeah.
So yeah.
And expound on that, because I wasn't familiar with that before meeting you.
Okay, well, a CPA, and not, this isn't disparaging at all, but a CPA takes certain educational requirements, certain tests that they take, experience, and they get the CPA license. Okay, and I know some great CPAs. So if you're one of my tax people in the past, this isn't a comment against you at all. But there's some limitations. Okay, for instance, if I'm represented by a CPA and I get audited, my CPA can't represent me in the audit. It requires something called an enrolled agent. An enrolled agent, the requirements are massively different than a CPA. It's a lot more educational requirements, a lot more experience, and the test is actually given by, through the IRS. And they become enrolled agents of the IRS, essentially.
Right.
And as such, if I'm audited, they can step in and take care of it. Okay. The other thing that I've noticed, and I know a couple of enrolled agents, is that they really focus on tax strategies. And I don't know whether it's because of the additional education they have, or just because they've seen so many different types of returns and had to analyze them. I really don't know, but I know that the people that I've spoken to just are immensely valuable with respect to what type of strategy you can use. So, we tend to take more of a holistic approach with what we do. We obviously we want to do your studies, but we also want to take a look at who you are and how this depreciation can apply to you, and kind of strategize for you so that you're benefiting from more than just the study.
Right.
We want to plug you into a strategy that will help you for the future.
Yes.
Because our typical client, in the right position, will take those tax savings, and that's effectively what this is doing, because this is going against income.
Right.
Those tax savings, and they're gonna not put it in the cost of a vacation. They're not gonna buy a new car. They're gonna buy another property.
Right.
Okay. And then just start the process all over again.
Right.
Right. And so we see our clients just amassing amazing levels of real estate, just incredible portfolios, and really creating generational wealth.
Yeah.
And that's so rewarding to us.
Yes.
Because it really is a value add to their lives.
Right.
And I mean, in developing properties, you got that same thing, because you're selling a home to someone that's going to create memories.
Right.
Here we're selling a product, and this is impacting them financially, which, if they're good stewards of the money, they're going to do very well by it.
Yeah.
So it's pretty exciting stuff.
Yeah, very, very. And I wish I had known you years ago with my properties, and to be able to take advantage of the cost segregation studies and the tax strategy, because like you mentioned, that's super important. Most of us investors are looking to spend as little as we can on taxes.
Sure.
Input cost segregation, give us this huge write-off.
Right.
So that we can have more money to go buy more properties.
Yes.
Like you said,
yes.
that's the objective for most of us. And so another thing I want you to touch on is like, why can't I just go to my CPA or registered agent and say, hey, do a cost segregation study on my property?
Yeah, great
and
question.
Save me some money, right?
Yeah, great question. The IRS wrote a document. It's a guide for IRS agents on how to audit a cost segregation study. Okay. And last time I looked at it, it was 268 pages. It may have grown. I'm not sure. I know we have it on our website. We have a link to it on the website. Within that document, they talk about what is a compliance study, what methodologies they recognize that could be used to get to that study. And they also have a large portion of that talks about who's doing the study. Okay. Now, this isn't all CPAs or all enrolled agents, because I know a couple that are both, but they have. It's really rare to find a CPA that has a construction background.
Right.
And that's really what the IRS is looking for. They're looking for construction professionals that know budgets inside and out, that know what it costs to build things, and be able to quantify things. Most CPAs can't do that.
Right.
Right. So as such, especially 5 years ago when costs were dramatically so much more, they just figured straight line was the way to go.
Right.
Right. Now that costs have come down, we do have a number of agents or CPAs that will refer clients to us, but they really can't do the study themselves
because they're not considered a construction professional. Right.
An engineer is the way that the IRS puts it.
Okay.
So yes.
So me as the owner of the properties, could I be considered a construction professional? Could I attempt to do my own cost segregation study?
I wouldn't. Our studies will range, when we give the report, they'll range anywhere from 140 to 180 pages.
Wow.
And what we effectively do is we take that structure and we forensically deconstruct it. Okay, and we're looking literally as, I think it's like 400 different categories that would quantify the amounts. For instance, you're measuring countertops or what have. So we're going to quantify how many, what's the lineal footage of the countertops, and then we're going to apply a price to it. So we're doing that through this whole study, and at the end, it's our program will take each one of those elements and put it in a cost category with respect to its depreciable life.
Yeah.
Okay.
Wow.
And then it crunches all the numbers and we spit out this report. To do that today without that programming behind you is literally impossible.
It sounds like tons of hours.
It is tons of hours. And we do spend a lot more time than just plugging in numbers. It really is critical on us and on our company's mission to get as much possible out of each property as we can.
Right.
So we're always calling the client and saying, is there anything else? Do you have any other receipts? Do you, because we want to build that cost basis as much as we possibly can.
Right.
Because the higher that goes, the higher their depreciation is going to be.
Right.
And it's not unusual for us during that process because our clients will give us pictures of the property. And then they'll also give us a list of things that they've improved or added or exchanged.
Right.
And sometimes we'll look at a picture and we'll say, or one of my guys will look at a picture and say, I don't see on their list that they put new appliances in, but these are new appliances. Well, how do you know they're new? Well, sticker's still on them, stuff like that. Or, you have a ceiling fan and there's a tag on it, whatever it is. And so you call the client and you say, did you just change out your appliances?
Right.
Yes, I did. Well,
we want to add that.
You've got to add that. You didn't send me a receipt. Oh yeah, I forgot. So we're always going through that process, and until we believe that we have a clear understanding of the property, we won't go forward and actually do the study. We want to kind of, so there's this like a pre-build process before we can even unbuild it.
Right.
Through a process. Yeah.
Before you can really break it down.
Exactly.
And it's not too long of a process, typically, it sounds like. I mean, without knowing anything about cost segregation, I'm like, this is going to cost a fortune and it's going to take 6 months, for you guys to do this study and to figure it out. And that's totally not the case. And
it is not the case. It does not take 6 months. If it does, there's a problem. If it does, it's typically a client problem. Okay, because we do ask our clients for certain things. We'd like to see a closing statement, right? So we know they closed on the property. So we ask them to send that over to us. Secondarily, if they had an appraisal either at the time of closing or since then, we'd like to see that because we can glean a lot of information off of an appraisal as well. They don't have it, not an issue. Third thing is the pictures, right? We want to see all 4 sides of the house, preferably. And then we want to see the interiors and look up because, believe it or not, ceiling fans, a lighted ceiling fan is a huge add to a cost segregation study because it's a 5-year property. So we look at that. And your kitchens and you don't need to go take measure because once you see a kitchen, I can we can say, okay, that appliance is 36 inches wide.
You can look at the cabinets.
We can scale it out.
Yeah.
And then we want to see the flooring, right? We want to see pictures of the bathrooms, laundry room. We want to see everything in that house that we possibly can.
Right.
And then the fourth thing is that list. And we don't want to see receipts. We figure everyone's going to be honest, but just give us a list. I replaced the flooring on this date and it was $5,000.
Right.
Just send us an Excel sheet, right? And that's when we sit down and we say, okay, let's look at the sheet and look at the pictures. And is there anything in the pictures that we're not seeing on the sheet?
Right.
Right. And we're not trying to keep our clients honest. That's not the intention. The intention is, did you miss anything?
Right.
Right. Because again, we want to build a cost base as much as we possibly can.
Yeah.
So once we get that from the client and we make that review, then we pass it off to the construction professionals to start analyzing it. Typically at that point, it's about a 2-week process because we do have some fail-safe measure. We do have some quality control measures that take place, right? You always have a secondary set of eyes looking at all of those quantities and such, because the keystroke's an amazing thing. If you say there's 200 square feet of sod and suddenly it's 2,000 square feet or 20,000 square feet, it's a problem.
Yeah.
Right. And
simple typo.
Simple typo. So we're looking for things like that. And our reports, we have 3 different nomenclatures, the way that all of our costs are reported. So we'll start going through that and we'll just look for that exception, right? Because we'll study the property. We'll have in mind what to expect. And as we're going through it, you go, that number doesn't look right. So we'll circle that and we'll go back and try to re-identify that and re-quantify it.
Right.
And sometimes it was right. Sometimes it's that keystroke.
Right. Yeah.
So,
but you guys are very thorough and have multiple steps to make sure that it's entered correctly.
Absolutely.
Yeah. And I mean, you worked with my mom on her property, one of her investment properties, rental property. And it took, 3 weeks, I want to say, maybe 4 total?
Yeah, I think, I don't know what the total was once we got her pictures and stuff back, but it was 2 to 3 weeks at the most.
Yeah. And not only was it affordable, in my opinion, for one property, less than $5,000.
Oh, yes.
Right? That she's paying your company. But then the benefit being even more, when she was trying to file her taxes before getting in touch with you, she was going to owe, right? She was going to owe, I want to say $7 or $10,000.
Okay.
And I kept telling her, Mom, there's ways to take, depreciation on your property. You should not be owing, knowing what she earns, as a W-2 employee and all of that. And then after doing the study with you guys, even after paying, your company and everything, she was able to actually get a return, of thousands of dollars. And that's just year one. Right. And so this carries over now.
Carries over. Yeah. Yeah. And that's the other thing too, because I mentioned that earlier property and the comparison between straight line and accelerated, and that well, the first question people go, well, I don't make that much. Oh, that's okay, because it does carry over. You don't lose the depreciation, you just carry it to the second year. And what's going to happen in the second year, there's more that comes in, because the kind of, and it's hard to explain a graph, but when you look at a graph and it has straight line depreciation across the years and amounts, and then accelerated depreciation, at some point they cross, and then they become parallel, with the accelerated depreciation being slightly below the straight line depreciation. But it continues. So even though you're getting all of this benefit the first year,
right?
Even if you used everything the first year, you still get the second all the way through 27 and a half years. So it's not just one-time shot. The other thing is that if you did that and then you added $100,000, people do that. They'll say, I had the ability to build a fourplex. It was the duplex. I added, can you redo a cost? Yeah, in that case you can. We'd go in and would recalculate. You'd have to come. It's a little more difficult at our end, because we have to figure, okay, at what point did you do that, and what was that adjusted cost basis? Because if you imagine, we'll just use figures, $500,000 cost basis, and it gave you $100,000. Your cost basis now is $400,000.
Right.
Right.
Yep.
And then say you added $200,000, now it's $600,000. Right. So we'd have to get to what that adjusted cost basis was at the point that you added made those improvements to the property.
Okay.
And it would start from there. So you actually could do it twice.
Wow.
Under certain circumstances.
Yeah. So depending on what you add to the value of the property.
Right. And the other thing too is, and people are listening to this, they go, well, but if that cost basis is going down when I sell the property, and the property are there capital gains? Is there something going on there?
Right.
Yeah, there are.
Right. And that's important to know.
Absolutely are. That is the situation. And that's why it's critical for us to stay in communication with our clients and say, these are the financial planning services that we can offer.
Right.
So if you start considering selling property, come to us first, because we're going to tell you not to sell it, but to do a 1031 exchange.
Right.
Right.
Yep.
And because you're kind of doubly taxed the way that the IRS actually does that.
Right. Yeah. And so at what point, is it about 5 years then that, at what point would it be not so much of a capital gains that's being earned?
Well, no, the lines will intersect after about 5 years.
Okay.
Okay. So that fifth year or sixth year, depending on how the property lays out, if it had a lot of 5-year property, it may go a little farther. But at some point, those lines are going to intersect. So you've effectively said, okay, it's year 5, we'll say, it would have been the same as if I went straight line.
Straight line. Okay. Right.
But you're still going to have to pay that.
Right. In capital gains. Regardless. It's just not so much more that you would have to pay.
Yeah.
If you sold it at year 2.
Exactly. Yeah. But bottom line is our mantra is don't sell. Okay. It's so difficult to get into that marketplace. Right. You're one of I don't know how many percent of people actually own rental properties, but it's rare air. Okay. You've worked really hard to get that second house or the third house or that other investment. Don't give it up by selling it.
Right.
Right. Exchange it. There's so many other things. Refinance it. There's something. But keep that property. When I look back at my career and the properties that I owned and went, nah, I don't want that. I sold it. Yeah. But today those are, even the smallest single family I ever owned is worth well over $1 million today
Oh.
because it was in Southern California for a time, right?
Oh, yeah.
And I look at that and go, yeah, that little post-war bungalow in Burbank is worth $1 million too,
Dang.
right?
Yeah.
And I paid $97,000 for it and sold it for $4 million.
Wow.
And thought,
Which seemed amazing.
king of the world.
Yeah.
And now I'm
Was
looking
amazing,
so, yeah, but there are a lot of strategies involved in the 1031 exchanges is just one of them.
Yeah.
We have a program that where you have a business owner, say it's a plumbing, contractor, and they own their own building.
Mm-hmm.
Okay, we have the ability to restructure his business entity, and we separate the business from the asset being the building.
Right.
Okay, and we create some LLCs and some C corps and a trust. And if it's done properly, and we make sure it's done properly,
Mm-hmm.
we do all legal behind it. We set up the taxes. We include the first year's taxes so that we know the paperwork's going to get done correctly. It'll offset the income from the business.
Wow.
And I mean, dramatically.
Yeah.
And as a business owner, to be able to do that
So powerful.
is so powerful.
Yes.
It's so powerful.
That keeps more money in our pockets,
Absolutely.
less money going to the IRS,
Absolutely.
and more money we can reinvest.
Yes. And even that, you talked about the study. You mentioned $5,000. Our single family home, which your mom's was, our single family study is $3,300.
Yeah.
Yeah.
3,300. Yeah.
And yeah.
As an investor, like that's very affordable,
Yes.
typically, and reasonable, especially when you're looking at, I don't know how much hers ended up being, the deduction.
Yeah, I don't recall offhand. I see a lot of studies.
Yeah, but more than worth it.
Yes. Yeah. Usually the return is 10 to 20x.
Mm-hmm.
So it's, a pretty significant investment.
Yeah.
I know I can't go down to the Chevrolet dealer and buy a Corvette for, 10% of the list price. But yeah. Anyway, but the thing that I was talking about with the businesses, even that, with the cost segregation on their building and restructuring them and including the tax services for that year.
Mm-hmm.
Most businesses, that's about a $10,000 bill.
Mm.
But, and I can't give specific people, but there was a study that their building was $7 million. Cost segregation came out at $1.2 million.
Wow.
And that went into that trust because it's all owned by the trust. And the other side came in as income off the business. That was $700,000. And there was no tax.
Wow. That's amazing.
And that cost, $10,000-$15,000.
Right.
So
They spent 10, 15 grand for this study and
right.
just saved.
$1 million too.
Yeah.
Because, 700 against, so they still have 500,000 that it rolls to the next year.
Love it.
So
That's amazing.
And then other strategies. You want to hear about other strategies?
Yeah. I want to hear about it all.
All right.
I could talk to you all day and just learn.
Well, one of the things we have, and we have a client in the Springs, Colorado Springs, that has, 50 or 60 properties.
Mm-hmm.
And he contacted me and says, hey, could I just send you the list and you tell me which ones are most viable? And we weighted it down to 24 properties.
Now, what makes it most viable?
It's the cost basis.
Okay.
And if they've already depreciated on the property, and then also what the land value is, because we got to get to that.
Yeah.
And anything less than $200K, typically
For cost basis?
we'll run the numbers
Mm-hmm.
and then and show the client. But at some point, especially if they've owned the property a long time, and they've
They've already taken a lot of depreciation.
yeah. Or they bought it at $80,000 10 years ago,
Right.
and it's worth $600 today.
Right.
But that's not the cost basis. It's $80,000.
Yeah.
Even if they hadn't depreciated, so they're going to look at that and go, okay, well now I have to take the land out of that, and land prices have gone. So, say they end up with $50,000.
Right.
And my study's going to cost them $3,300.
Right. Yeah.
And I look at it and I go, I'm just,
not super worth it.
It's not worth it. I'm not going to trade dollars with a client. It's not the proper thing to do. It's just not ethical, unless it just twists my arm. But even then, I think I don't know. I don't think I'd do it.
Right.
But so we weeded it down to 24 properties. And then I asked him a question. I said, have you paid taxes the last couple of years? He goes, well, I kind of owe. And this year and then the year before, I paid a whole bunch of taxes. Okay, well, if you own those properties back in those years, we can do a go-back study and analyze it for that year's taxes that you owed the money or you paid the money.
Yeah.
And we can claw back that money from the IRS. And so that's what we've actually done.
Nice.
And now he's and we did it through an amended return. And so he'll get the check for that. And now he's filed for his other year. Right. So now he's current with his taxes.
Yeah.
And going forward, he's a real estate broker. He has about $2.5 million stored up in these properties and depreciation going forward. So he's not going to pay taxes for a bit.
Yeah. That's so powerful. I love that story. Thank you for sharing that.
Yeah, and it's exciting because clients will, we get the study over to them, and typically email it out, and then call them, say, hey, I just emailed that out. Open it up.
Because they see it and they're like, wait, this is 100 pages of what?
Yeah, well, so I go, okay, go to this page. Go, okay, what's that? That's this year's depreciation. And they're just, ceilings excited. And we came up with the slogan, it's Christmas every day, Cost Seg Property LLC.
Love that.
Because it really is. It's such a great thing to deliver good news.
Yes.
Because we live in a society where we don't get a whole lot of good news. Interest rates are there, and foreclosures are up, and property values are dropping, and
and profits are being taken from us left and right.
Oh yeah, and we do. My wife and I have property in Southwest Florida, and thankfully we don't need to sell. But my wife pulled up a map, a realtor map, and said, and it was like 1 square mile, and it was just, you couldn't see the streets on the map because it had all these listings. Realtor.com, and you got to click on each.
For sale, yeah.
And it's just like everything was for sale.
Woof. Yeah.
And property values are just dumping.
Yeah.
And you just go, oh my gosh. So we don't get a whole lot of good news.
Right.
So when something like this comes along, it's kind of fun to tell people and give the good news.
Rewarding for you to
yes, absolutely.
see that for your clients. And I wasn't fully aware that you do more than just the cost segregation study, that you, as mentioned, like you have full financial planning essentially that you can offer with them to to structure what to do with those savings or returns. Or
how to structure themselves so that you can do cost segregation and take the maximum advantage over having done that.
Right. Strategy. The strategy is
it's all about that.
Yeah.
And then, we do offer, and they're associates. It's not like, they're chained to a desk in my office or something. They're all associates, people that I've met and that I respect and that add value to what we offer, and we offer value to what they do.
Right.
So it's really more of a synergistic play between all of us, and we've come together just to offer an array of services that assist and benefit the client.
Yeah, I love that. And I love that you're part of the real estate deal makers community, obviously. Yeah. And we're going to have our member appreciation party soon.
Oh, good.
And so there's a couple people already that I have in mind that you guys are going to have that synergetic relationship and be able to help each other with your clients. Good. So I look forward to connecting you with them.
Absolutely.
Yeah. So one more question about your personal life and what brought you into this business.
Oh, great question. Well, first of all, I remarried. 2 years ago,
Wow.
and met my wife through, believe it or not, through a dating site.
Oh, like eHarmony?
It was actually Facebook dating.
Oh, okay.
I don't even know if it's still around.
It is, yeah.
But
I didn't know people really use it.
She lived in Florida. She was in Colorado. All of our kids are in Colorado. All 6 of the grandchildren, all from her side, are in Colorado.
Right.
And she went online, and because she was in Colorado, she had to go through all the Colorado guys before she got to the Florida guys. She was out here taking care of her daughter that was having some issues with pregnancy. My wife was a labor delivery nurse, so she knows all of that.
Yeah.
And so she had to go through all the Colorado guys. And I was the first one that popped up. And she looked at my profile, and you had this thing about questions you can answer, right? This is if you do anything for 1 year, what would it do? What would it be? If you could spend a year doing anything you wanted, what would you be doing? Sorry, I misquoted that. And I said, I'd be on a large catamaran chasing horizons. And she just went click, And so I see it, and I said, okay, and I was really attracted by the profile, and so I messaged her back, and she goes, I don't know what I was thinking. Which is not really what I wanted to read.
Right.
Oh, I go, really? Did you finally look at my picture? And so she says, I live in Florida. I only come to Colorado. And I said, hey, I saw that on your profile. But let's just at least explore the options.
Yeah.
So we met on June 23rd of 2023. No, 2022. We were married 9 months later.
Wow.
On the beach in Florida.
Nice. So you had a long distance relationship for
a little bit. For a little bit, yeah, because she was in Florida, and then she'd come back out here, And so we have properties in Florida and Colorado, and just loving life.
That's awesome. Congratulations to both of you.
Yeah, it's just the love of my life.
Yes.
So, and you met her the other day too. She was here at the event.
I wasn't.
Oh,
here.
you were here. That's right. Oh my gosh. Well, Vicky, if you're watching, come on up to the Business Foundry and Gabrielle.
Yes.
But how it came across my desk was exactly that. It just, somebody presented it to me. They just sent me this thing on it. And I went, what? It's like, this can't be right.
This is before you knew about?
Yeah, I knew nothing about it.
Okay.
And someone just sent me something. And the first thing I did was get on the phone with my CPA and go, I own that apartment deal and we destroyed line. Why don't we do this? And it wasn't a pleasant conversation, but it just really struck a chord with me because I saw the benefit in providing that type of service to others.
Yeah.
And it was just really kind of an aha moment for me.
Wow.
So we started structuring a company that could do cost segregation as well as other things.
I love that.
And we're just now, a couple of years later, getting to the point where we feel that we can broaden our horizons and offer more nationally.
Yeah.
And so we have people out there doing that for us.
That's amazing. And started from a place of service, right? Like, so starting from realizing the benefit for yourself as an owner of properties and how cost segregation can save you a ton.
Right.
And then, having the realization of like, wow, we can do this for other people too.
Yes.
Yeah. And so Cost Seg Properties was born.
It was born.
I love that. I didn't know that about your company.
Yeah.
Thank you for sharing that.
It's my pleasure.
Yeah.
Thank you for allowing me here.
Yes, of course. And I talk about you all the time. And I'm sure people are like annoyed by me at this point with how much I'm just like, guys, like if you own property, you need to talk to Michael. Like you need to understand cost seg. If nothing else, just have a conversation and understand what it is and why we should be utilizing it. Every single person, anyone who's watching this, if you own property anywhere in the U.S., right?
Yes. Yes.
If you own property, single family homes even, right? And that's the thing that a lot of us didn't know. If you did know about cost segregation, is that this can be used on single family investment properties.
Right.
You need to be in touch with Michael.
Yes. And even, we can do studies in the U.S., but we have a client that lives in Canada, but he's bought some properties in the U.S. that are rental properties.
Mm-hmm.
And we can do cost segregation for him because he does have to file U.S. taxes.
Yeah.
Now, they don't impact his Canadian taxes.
Uh-huh.
Okay.
But it's less that he has to pay
less than
the United States.
So he still has, because he has all the rights and benefits as a taxpayer, even though he's a Canadian citizen.
Mm-hmm.
He still has all the rights and benefits of a U.S. taxpayer.
Mm-hmm.
So we don't go, well, cost segregation works for you, but not this guy. It works for everyone.
Love that.
So, yeah.
That's amazing. So tell our viewers how they can get in touch with you. You can even share your phone number.
Oh, sure.
If you'd like.
Sure. Our website is costsegproperty.com. Direct line to the company is 719-551-2020.
Yeah.
Because we have clear vision.
2020. That's good. And are you on social media?
We're developing our presence.
Okay.
Yes.
Yeah.
I can't say that we're there, but it's something that someone poked me in the eye the other day and said, you need to be doing this. So
especially with our community, we do a lot of stuff on social media. So we want to be able to plug you into all of those, all those spaces, Facebook and Instagram.
I know there's so many platforms, and you just go, oh my gosh, I'm just lost. I'm sorry.
It's a lot.
That was the generation behind me, and but we'll adapt.
Yeah,
we'll be okay.
Yeah. So. But for now, phone number works great.
Phone number's fine.
Check out the website. Your email is on there.
Right.
And there's also a form people can fill out.
Right.
To put in an inquiry.
Mm-hmm.
Yeah. Awesome. Sweet. Well, thank you again for being here with me today.
It's my pleasure.
Yes.
It's my pleasure.
And for those who are watching, be sure to reach out to Michael, check out the website, get informed. If you guys have questions, reach out to him or me. And happy to help you guys. For now, that's it for this episode. Until next time.